Hi, I'm Dania, and I will briefly introduce Mitsui & Co. Ltd., one of Japan's leading generation trading companies. Mitsui was officially established in 1947, although its business activities can be traced back to the late 19th century. The company's mission is to develop brighter futures worldwide, while its vision focuses on creating sustainable value through long-term global partnerships. Mitsui operates a highly diversified portfolio covering sectors such as energy, minerals, chemicals, machinery, infrastructure, as well as food and consumer service. Headquartered in Tokyo, the company has a strong global presence with operations in over 60 countries. In the fiscal year ending March 2025, Mitsui recorded approximately 14.66 trillion yen in revenue, showing steady growth. However, profit declined to around 900 billion yen due to higher operating costs, commodity price fluctuations, and global economic uncertainties. As a multinational company, Mitsui is exposed to exchange rate risk, particularly from fluctuations in currencies such as the US dollar and euro against the Japanese yen. To address this, the company practices disciplined financial management and ethical risk management, including hedging strategies and ESG-focused decision-making, ensuring long-term sustainability and stakeholder trust.
2.0 Forecasting exchange rate. First, evaluation of forecasting techniques. Fundamental forecasting focus on interest rate, inflation, economic growth, and balance of payments. Second, market-based forecasting use forward exchange rate to reflect market expectation. And lastly, combination approach provide more reliable and balanced exchange rate prediction. Second, ethical implication of forecasting assumption. Forecasts must use realistic, testable, and clear assumptions, support good corporate governance and stakeholder confidence, and also avoid misleading stakeholder by overstating accuracy or using realistic assumptions. And lastly, importance of exchange rate forecasting. Enable accurate budgeting and cash flow forecasting. It also helps align revenues, costs, and profits with currency movements and also support better long-term foreign investment.
My name is Silangesan my metric number is 231240278. Next we move to exposure to exchange rate fluctuation. Mitsui & Co. is a global Japanese trading and investment company operating in many industries such as energy, metals, machinery, and consumer services. Because most of its business is conducted overseas, a large portion of its revenue, costs and investments are in foreign currencies, especially the US dollar. Therefore, changes in the Japanese yen exchange rate directly affect Mitsui's revenue and shareholder returns. As a result, exchange rate fluctuation is a major financial and strategy risk for the company. Next, we move to types of exchange rate exposure. Mitsui faces three main types of exchange rate exposure. First is transaction exposure, which arises from foreign currency payments and receipts, especially in commodity and energy transition price in US dollars. Second is economic exposure, which affects Mitsui's long-term competitiveness and investment returns when exchange rate change. Third is translation exposure, which occurs when Mitsui converts foreign subsidiaries' financial statements into Japanese yen, causing volatility in reported profit and equity. Next, company impact and transparency. A weaker yen increases Mitsui's reported profit from overseas operations, while a stronger yen reduces earning and asset values because Mitsui makes long-term investment abroad. Exchange rate risk can affect project returns and shareholder value. Therefore, Mitsui discloses its exchange rate risk and management strategies clearly in its reports. Transparent and balanced reporting helps stakeholders understand both the benefit and risks and supports ethical and responsible corporate governance.
Hi, I'm Hemrashni Ravindran, and today I would like to talk about the scenario analysis. A 10% depreciation of the Japanese yen would have mixed effect on Mitsui & Co. Ltd. due to its global operation. Most of the Mitsui revenues, especially from energy resources and trading, are denominated in foreign currency, mainly USD and Euro. When these revenue are converted into yen, reported sales and profit would increase, creating a short-term boost in its financial performance. However, the weaker yen would also raise the cost of important materials, services, and capital equipment while increasing the yen value of foreign currency debt and interest payment, putting pressure on cash flows and profit margins. Although foreign assets and investment may appear more valuable in yen terms, exchange rate volatility adds uncertainty to long-term investment returns and strategic planning. Overall, while improved reported earning in the short run, higher cost and financial risk highlight the importance of strong exchange rate risk management for long-term stability. Thank you.
For Mitsui Co. Ltd, the most significant exchange rate is transaction exposure. This is because Mitsui operates globally and conducts a large volume of trade in US dollar, while its reported currency is the Japanese yen. As a result, any exchange rate movement directly affects the company cash flows and profits. In a scenario where the yen depreciates by 10%, Mitsui foreign currencies revenue increase when converted to yen, which may improve the short-term profits. However, this benefit is partly offset by their own import cost, foreign currency payables, and interest on foreign debt. Since these are real cash inflows and outflows, the transaction exposure has the greatest impact on their liquidity and short-term performance. To manage this risk, Mitsui should apply effective hedging strategies. This includes forward contracts to lock their exchange rate, currency options for flexibility and when cash flows are uncertain, and currency swaps for the long-term foreign currency debt. In conclusion, transaction exposure is Mitsui's primary exchange rate risk, and combined with the ethical hedging strategy is essential to protect financial stability and shareholder value.
Mitsui operates globally, so it faces high exchange rate risk, especially from movement of the Japanese yen against the US dollar. Exchange rate change affect the company revenue, cost, and profitability. Our findings show that exchange rate forecasting is very important for financial planning. Basic forecasting is useful for long-term planning, while market-based forecasting works better for short-term decisions. However, using only one method is not enough, so a combined approach is more reliable. Mitsui is exposed to three types of exchange rate risk: transaction, economy, and translation exposure. Among these transaction exposure is the highest of the short term. Lastly, the scenario analysis showed that although a weaker yen might increase reported revenue, it can also increase cost and earning volatility. This shows the needs of proper exchange rate risk management. First, Mitsui should continue using a combined exchange rate forecasting approach with realistic and a transparent assumption. Second, the company should prioritize managing transaction exposure by using forward contract to stabilize short-term cash flow. For uncertain cash flow, currency option can be used but to provide flexibility while limiting risk. For long-term foreign borrowing and investment, currency swap can help reduce exchange rate exposure. In addition, Mitsui should strengthen operational hedging by matching foreign currency inflow and outflow and using local financing. Finally, Mitsui should maintain ethical and transparent reporting. Hedging should be using for risk management, not speculation, to support long-term sustainability.